On one hand, we hear that 3 members of the U.S. Congress are seeking to protect cryptocurrency from the U.S. government for users, and are expected to introduce new legislation right around the corner in early September. On the other hand, we're just finding out about a secret meeting of financial corporations to demonstrate the digitalization of the U.S. dollar instantly transformed into a regulated cryptocurrency that is not Bitcoin. And at the same time, the SEC is reinforcing to investors to be aware of scams involving initial coin offerings and other public ICO related claims. So will the upcoming regulation actually help or hurt users of Bitcoin across the world and in the United States? What details do we know about the secret blockchain meeting of financial corporations? And what good tips does the SEC have for ICO investors? Let's discuss. Hey everybody, I'm Gary Palmer Jr., you're you, and together, welcome to Minting Coins. So as we were talking about in the previous video, there's a lot of excitement going on in the air around Bitcoin and inside the cryptocurrency space. We have Bitcoin just shooting up past the $4,500 range, and market caps just continuing to reach toward the moon, hitting new highs all the time. With that being said, we're also seeing more and more adoption, more and more talk of regulation, and just usage and acceptance from one direction or another of either Bitcoin or blockchains in general, even within the United States. But what that means is the creation of rules and laws and regulations surrounding this new technology that is borderless, neutral, permissionless, cryptocurrency blockchain technology, or digital assets, as it were. And there's a lot of information coming about what this means and where we're going, everything from secret meetings into new laws that are coming, that will be introduced in the Congress, and also, the enforcement from the SEC. So with that being said, why don't we just take a quick peek at the market and then look at this news and let's discuss. Okay, so really quickly, looking over here at coinmarketcap.com, we have 865 currencies and a total market capitalization of $164 billion, 24-hour trading volume in excess of $6 billion, and our Bitcoin dominance still hovering around 45.9%. And just huge gains with Bitcoin. We also see Ethereum rising, Ripple rising, 5%, 5%, 10% respectively. Bitcoin really pushing 6% with a $75 billion market cap. Very, very interesting, very, very exciting. And so with that, there's a lot of people talking about Bitcoin, liking some aspects of Bitcoin, but liking it for regulated investors. We were looking at just the previous video about Russia wanting to, on one hand, eliminate Bitcoin for regular users, but then introduce the BitRuby for ordinary people, then keeping Bitcoin for just the accredited investors, right? So turning over into the news, at this article over at Coinivore, we see that the U.S. government is moving to protect cryptocurrency from the U.S. government. So U.S. Congress is seeking to protect cryptocurrency from the U.S. government. But this could be a very misleading sort of headline, because it may not actually be true, right? Because even if their intentions are good, what the actual legislation is that ends up getting approved could look very, very different down the line. But the information that we do have here is that at least 3 members of the U.S. Congress are currently working on legislation that will aim to protect certain cryptocurrencies from government interference. So right there, the word certain, does not lead to certainty. Additionally, a source reportedly told the Daily Caller that at least one Republican member of the Senate and 2 Republican House members are working on this draft legislation, and that these three lawmakers involved asked not to be identified because cryptocurrency and digital assets is a pretty sensitive topic. Not a lot of people want to talk about it, or a lot of people do want to talk about it, but it definitely has repercussions because of different constituencies that have different agendas around this. Speaking of agendas, they're saying that there's an agenda to make digital currencies mainstream, currencies and to treat them like the US dollar. Again, this is probably certain currencies and not all currencies. Further, there's an entity looking to issue a digital currency that is compliant with anti-money laundering laws. And so, again, is this a Fed note? Is this a Fed dollar? Is this essentially the bit ruby over for the United States? That if this source is saying that an entity is looking to issue this digital currency. And so this is quoted on here to say that the centerpiece of this plan is to go mainstream digital currencies so it can be treated just like the American dollar. Doesn't sound like a very strong cryptocurrency if it's treated just like the American dollar. That would explain if, you know, it comes about that they don't want ordinary people having Bitcoins in America either. First, there's a new entity that is considering issuing a brand new digital currency that is compliant with anti-money laundering laws, known as AML, and is unlike any in circulation. Excuse me. And so Congress is seeking to protect certain cryptocurrencies that meet minimum conditions. So we just took a quick turn in this article from this article talking about U.S. Congress moves to protect cryptocurrencies from the U.S. government to Congress is seeking to protect certain cryptocurrencies that meet minimum conditions. So this took a quick left-hand turn. Or is that a right-hand turn? Preventing the digital assets from being used by terrorists, drug traffickers, and other engaged in unlawful activity. Again, you know, we've seen this before where they use the worst of crimes to remove privacy from everybody. And so we see the rhetoric coming out from these meetings who don't want to be named, from the people who are working on this legislation. It's, you know, being pitched as being helping people with, you know, cryptocurrency, but we see very quickly from what's actually being discussed that, you know, this is moving the way of a not Bitcoin type of coin. So this legislation is expected to be introduced in early September after the congressional recess. Further, earlier this month, U.S. President Donald Trump signed a new controversial foreign sanctions bill into law, and this also targeted cryptocurrencies. Now, it targeted them from foreign governments of Iran, Russia, and North Korea, but cryptocurrencies are global, borderless, permissionless. So it's sort of like email. When you send an email, that email could exist on multiple computers all around the world because it's just bouncing server to server, because the internet is just one giant thing that exists everywhere. And so again, their goals are to monitor the cryptocurrency circulations. And again, they want to combat the illicit financial trends that are happening in the world. And then as we all know, last month the SEC issued the press release about token sales. And additionally, as we're going to talk about in a second, Wall Street tested the use of digital currency in a secret meeting during the middle of April 2016. So that was a while ago, April 2016. This is 2017, right? Just checking. So that was almost a year and a half ago that there is a secret meeting with Wall Street to test these digital cryptocurrencies. And then since that April 2016, we had the Bitcoin halving in August of 2016. And then you fast forward a year later, and this is where we are right now. And so this just is just proof that the plans that they're working on are well deep underway in terms of detailed execution and then further implementation. And the fact that we're hearing about this now is just coming from, you know, these Republican lawmakers that are essentially tipping off some reporters so that we know about this, because the lawmakers are now in a position where they want to create the laws and the rules about these cryptocurrencies that that Wall Street has already, you know, essentially sanctioned and approved. And Wall Street is essentially heavily invested in you know, Bitcoin ETFs and Bitcoin companies and Bitcoin mining and the Bitcoin cryptocurrencies as well, both from investing at the corporate level and also investing at the personal level to take advantage and make sure that these folks who understand what's happening and how their own industries could be disrupted are going to continue, you know, positioning themselves to maintain wealth and power. So the goal here, you know, is not to take away anything that they're doing, but the goal here is to help you understand what is it that they're doing so you can use this information to make your own decisions. And so let's turn to that secret meeting that they had over about a year and a half ago, just under a year and a half ago in April 2016. The secret Wall Street meeting used to test blockchain. And why are they essentially interested in this? You know, is it to like dominate the world? No, it's not directly to dominate the world, maybe indirectly. But what it's really about is that when people send money, if it doesn't matter if it's to pay a house or to buy a car or to buy anything, the fact that it takes so long to send money from point A to point B is a loss of efficiency, and it creates a loss of revenue for them. If people could send money quicker, then that would actually create more circulation, and creating more circulation is creating more volume, and we have more volume of money flowing through the world. It's like a machine that's like finally working on full gears, and it's going you know, very efficiently and very quickly. Having all this additional money just instantly pumping through the economy is going to create billions of dollars of revenue circulation, which is going to create, you know, taxes, fees, just all sorts of wealth. And so this meeting had over 100 executives of some of the world's largest financial institutions in this private meeting. And they were at the Times Square office of NASDAQ Incorporated. And so they're saying that this event marked a key moment in the evolution of blockchain, notably for both what was achieved as well as for how many people, how many firms were involved. And again, this is going to offer a way to free up billions of dollars in speeding up transactions that currently could take days. And so and then additionally, transforming cash into this digital form. And when we say cash, not just cash in the form of cold hard cash, cold hard physical cash, but also cash that's locked up in bank accounts, because the cash that's locked up in bank accounts can be very, very difficult. As we all know, it could take weeks to send a wire transfer because it's so inefficient. And so if banks could take advantage of the blockchain to move that cash much quicker, it's going to open up billions of dollars for them to take advantage of, you know, inside their business models. And so it's stated right here in this quote that they created the digital dollar, that we created a digital dollar to show the group at NASDAQ an instant debit and credit on a blockchain. And so there you have it. You know, that they did it, that it's tested, and now we have laws that are happening around it that we just saw in the previous article, and that from the previous article when they stated that an entity wants to create you know, essentially this digital dollar. Again, you know, it just shows that this is stemming from the quotes that we're getting from both of these articles, from the reporting from both of these articles, that this is the direction that it's going. And so we've been quietly building a whole bunch of folks for a few years. Blockchains are networks. We think collaboration is important. Collaboration at the beginning is getting the model right. And so they are quietly working on this. They're putting all the pieces together, and they're just getting, further and further down the line of executing their grand plan of positioning themselves inside this world that is going to create the most value and most efficiency for their business models. So it goes on to say that the most common blockchain is one that is supporting the digital currency Bitcoin. And so Bitcoin is the cryptocurrency blockchain digital asset that has the greatest network effect across the entire world by far. And so financial firms have been reluctant to embrace Bitcoin because of the anonymous users could entangle banks in violations of anti-money laundering and know your customer regulations. And so that's the banks don't want to get involved with Bitcoin because of that risk. And that's what we hear across the entire country inside of America, because all the different states have different laws, and it's really difficult for a corporation, a national corporation, to operate in just that one state without opening it to risk of other states. And so digital US dollars or any other fiat currency, on the other hand, doesn't pose those risks, because digital dollars, let it be actual dollars or digital dollars, Fed notes, Fed coins, whatever it is, that has full anti-money laundering laws and know your customer laws, would be fully compliant as opposed to Bitcoin, right? And so this article just goes on to state how Wall Street was one of the earliest to benefit from computers replacing previous systems and people. And now 30 years later, Wall Street, has those legacy systems, computer systems, as a hindrance. But as Wall Street took advantage of what it understood in the investment world with new silicon computer companies and internet companies, Wall Street is now going to be taking advantage of and positioning it in the world of blockchain technology. And so they want to be able to move the cash again from one account to another. It's going to decrease the time. They're going to make more money. And what they're looking forward is, in this part in blue, that the payment and the settlement become the same thing. So instantly when the contract is signed, the payment is sent, and then not just is the payment sent, but the settlement happens at the same time. Right now, when someone sends money and someone verifies that the money is received, is a 2-week process. So to make both of those fit in one sentence is worth billions of dollars to these banks that normal people in Russia or America don't understand. That making a payment and settling it might look instant when you swipe your card, but it's a very difficult process in the traditional banking world. Bitcoin could fix that. They could just all use Bitcoin, but the governments won't let them use Bitcoin because of the private nature that Bitcoin has, even though it's not 100% private. And so now where they are is that they're focused on creating solutions, and this is software engineering is going to reshape financial services. This is from the Financial Post. This is Wall Street's perspective, essentially. They know what's happening. They have these secret meetings. They've been working on this for over a year and a half. And then this brings us to today. Technically yesterday, this tweet came out yesterday. So this is from the SEC. Investors beware of scams involving initial coin offering related claims. And this takes over to investor.gov, which is from the U.S. Securities and Exchange Commission. And so this is an alert to where we are now, where we already saw the previous alert from the SEC, and the SEC just letting people know that some ICOs and some cryptocurrencies and some digital assets are actually securities, and so people could be at risk of security violations, even though this is really confusing and no one understands exactly which coin is and which coin isn't, since the only example that they gave was an example of the now defunct DAO, back with the whole Ethereum Classic fiasco. And so here they're just putting out more warnings, more fear, more caution into the market, and making people aware that there's going to be fraud and frauds that include pump and dumps and market manipulation schemes involving publicly traded companies. This is probably more of a warning to the publicly traded companies than it is to the people, but it's still interesting to understand this nevertheless from both perspectives. So these activities may provide fair and lawful investment opportunities. There may be legitimate claims, but companies that are publicly announcing ICO, coin, token events that are doing it to affect the price of their stock, could be at major risk. And so we're not going to go into all the details here, but they talk about market manipulations, pumps and dumps, spreading false and misleading information about a company in order to increase or decrease the value of that stock, and using ICO information to increase or decrease the value of that stock. Then purchasing or selling, pumping or dumping into or out of that coin, which is, I think, something that a lot of people are familiar with in this space, but now the SEC is talking about it as it specifically relates to companies that are publicly traded, not just a business with a website and a white paper. And so a couple tips here from the SEC: always research a company, always consider the company's finances, their organization, their business prospectus, the business prospects, the tangibility of, is this company actually going to be around a year from now, or is this like a bad idea? Investors should always do their own research, be aware that information from online blogs, social networking, even a company's own website may be inaccurate and potentially misleading. And so you want to be especially cautious regarding stock promotions and just recognizing what could potentially be a pump and dump scheme or a market manipulation. And then just look out for the warning signs of the SEC suspended public trading, increase in stock price or trading volume happening at the same time of promotional activity, buying on top essentially. Lots of press releases and promotional activity monitoring or announcing events that ultimately do not happen. If the company has no real business operations or value, but doesn't that describe, Twitter at first, or, Snapchat or Instagram? So, there are exceptions maybe. And then companies issue a lot of shares without corresponding increase in the company's assets. And lastly, frequent changes in the company name, management. And so this is just warnings coming out from the SEC. And then last just quick side note, and then we'll be wrapping this up, is that while we have the SEC in the United States increasing this information that's coming out, talking about the risks involved that people have inside these ICOs, and how people have the risks involved in some of these that may be securities, and how people have risks involved in some of these that people don't understand who's behind some of these coins. We have the same concerns coming out of Russia. We have the same concerns coming out of China. And so now we have this one article coming out of CoinDesk that's talking about China's regulators who are considering suspending all ICOs out of China. And what are they concerned with? They're concerned with the illegal financial business activities that include fundraising targeting non-specific objects, digital assets, blockchains, without legal approval, or other activities that the People's Bank of China identify as illegal. So it's just really interesting now to see that what we're seeing out of United States is what we're seeing out of Russia, is what we're seeing out of China. We're, here from this perspective, out of this news, putting this all together, are definitely seeing a convergence of what the financial regulators are saying in terms of both Bitcoin and in terms of these national digital cryptocurrencies, where it's okay for them to have Bitcoin, it's okay for qualified investors to have Bitcoin. But in terms of the individual countries, or the people inside those countries, the ordinary people, they need to have all these laws to restrict them. And so it's really interesting what that means now, and really interesting what that means for you now and for the different people out there. If someone was to already have Bitcoin, if someone was already to understand this technology, if someone was to already be in this space before everything was to hypothetically be made illegal, or before everything was to, you know, perhaps change dramatically, or before information starts coming out in the mainstream media that's telling you one thing or telling your family and friends one thing, when maybe you know what the actual truth is. You already understand how the technology works. You understand what the differences are between Bitcoin and Ethereum, or the differences between Bitcoin and Litecoin, or the differences between Ethereum and Ethereum Classic, or Ethereum and EOS. And yeah, so that's where we are. And so thanks for sharing this information with me. Thanks for going over these reports of the legislation that's going to be coming out in September that we could see, that is essentially stemmed off the secret meeting that Wall Street had you know, last April 2016. And so share, you know, please share, what do you think about all this in the comments below? In terms of the positive aspect of where can we go from here, do you think it's likely that we're going to see a Fed coin or a Fed note? Do you think it's likely that Bitcoin is going to become illegal for everybody? Or do you think that, you know, some country is going to use the game theory to give more than they're actually taking, and it's going to allow those countries to really excel in the future? So like, you know, tap that like button if, you know, you found this video helpful. Leave your comments below, follow us on Steemit, and we'll be pumping out more videos, talking again soon. I'm glad that together we're minting coins.